You're always ready. That's the beauty thing about you, right? It's like waking you up 3 a.m. Emilio, what do you think about so and so, and how is that going to, if it's going to be in Bermuda versus the Caymans, or God knows, Gibraltar and Malta? Yeah,
Not Malta or Gibraltar ever.
never. So,
Bermuda.
but
Bermuda one,
but
Caymans two.
who's three?
I wouldn't go three. That's all you need.
Because I thought that, and I've seen that Malta is trying to push their sales structure similar to a sales structure that we've seen in Bermuda as the entry point to the European market.
Yeah, Malta's huge for the reinsurance and specifically for captive business in the European sector. But I wouldn't. It's not. It's frowned upon because there's so much negative financial movement within Malta
Hmm.
from different organizations. I'm going to keep it very vague, but
Let's
I
keep
would
it vague.
recommend Bermuda. Bermuda is more regulated. It's more approved. It's the A-rated domicile.
Yeah. So reinsurance, go Bermuda, go Caymans, because this is what everyone knows and familiar. And because it's a small community, everyone knows everyone else. So transparency, I would say, is a key factor over there, right?
It's always a key factor, especially the agreements that they have with the different governmental departments to make sure that their regulatory compliance is properly
Oh,
set up. So
thank you for bringing regulation and regulatory. And this is why we have Dario with us today. Hey, Dario, how are you doing? Thank you for joining us on this lovely day.
Thank you for having me. It's great to be here.
Ah, fantastic. Dario, how about you give us a quick introduction, who you are, and what you've done in the insurance industry so far?
Sure. Very quickly, I'm Dario Luna. I'm a managing partner of Aqua Capital. It's a boutique advisory shop out of Canada and Mexico. I've been participating in the insurance industry for more than 20 years. I guess between a long time in regulation, also broking alternative risk contracts out of London, and then lately as an InsurTech entrepreneur. So I guess I have a little bit of everything to talk about InsurTech and insurance.
Okay, so basically the topic of today is, I don't know, let's call it Vesttoo Chapter 2. Chapter 2 in the saga, because it's the gift that keep on giving as, I don't know, as a train wreck, but it's not a train wreck because there is so much news that happen, and of course, everything that we're saying is based on public information, and there will be a few, you know, thoughts and opinions, but we don't know anything from the inside, right? Um, Emilio, do you want to catch us up with what's going on there? And
happy to do so. So from the past couple of weeks, from our last initial discussion, Vesttoo has had some major issues. The FBI started investigating the fraudulent LOCs. It's come to a point where pretty much everyone between Corinthian, who's one of their backing partners, Clear Blue, which is one of their largest fronting companies, everyone that's involved or has been involved have been looking at replacing not only the LOCs, but reinsurance. So moving away from Vesttoo's platform um, to the tune so far. I mean, Clear Blue had $1 billion that they were looking at putting within Vesttoo. Now, how much they put in there is unknown because we don't have that data. And then what Corinthian had in there, I'm assuming it's another 1.5 to 2 billion in there. And then from Root, from Hippo, from everyone else that was included within that, you can easily assume that their client list has dwindled down to specs, and the nails are quickly being put into this coffin.
man, and frankly, I find it very sad, right? You have a startup that build a marketplace, saw a need to improve the, how can I say that, the secondary market of ILSs, especially for the non-cut. It was a great opportunity there. They started to get traction, and then this allegedly or really fraudulent LOC that just dropped like a bomb on the marketplace. And with that, I think that the CEO and the CFO are now suspended. The board took over. They fired about 75% of their employees, so they are narrowing down, red alert, all hands on board, and they are ready for a battle which is going to be so many expenses on legal and auditing, etc. And we are still not really sure because, as you said, the FBI now is in the picture. They are auditing, and everyone is trying to figure out what really happened there and who wrote the fraudulent LOC and what was the
Well, there's
responsibility and liability of the platform. Yeah, sorry.
there's multiple different banks that are involved as well. It's not only the Chinese construction bank, but you have Standard Chartered, for example, gigantic bank. So there's multiple fraudulent LOCs that are out there, and the due diligence behind the internal efforts of Vesttoo, I think there's some security measures that were missed. Even though you have an LOC from an email that you've received from whatever entity, and it comes from that banking entity, having a panel to look at and making sure that the LOCs are in place, that there's accounts open in place, looking at statements, a lot of things were missed on this, and it's Dario. If you could chime in, and from your regulatory background, I think you'd have a better perspective.
Yeah, no, for sure. It seems to me that there were deeper controls missing in the process of booking that LOC equity layer that Vesttoo was managing itself in order to make the top securities more well, to have the good rating and make them attractive to investors, right? And that deep cross check, that is something that it's quite it's just a standard practice in the financial industry of having sort of like a back office just checking that the security of that layer is in place, that is true, that is firm, that is effective. I think would have avoided a lot of problems. Obviously, right now we don't know whether Vesttoo was subject of a fraud or involved in the fraud, right? Of those LOCs, and that is the biggest question to me in terms of controls, because I mean there's no 100% vaccination against fraud anywhere. Criminals are out there. They are trying to break the system. They're trying to, and it's really hard to have just a complete bulletproof operation. That's why keeping live and recurringly rechecking your system to make sure that there's no flaws and you're tackling these potential problems is so important, even for startups, I mean, they grew really, really fast. They were at their Series C or raising the D. But nowadays, you cannot grow without proper checks and balances in place, without doing things that big companies do, because, I mean, one of these things can bring you down, even if you're being the victim and not the perpetrator.
So
Yeah,
here's
the
the thing,
security.
right? When I look at that from a regulatory standpoint, there are the checks, right? And you need to have all these checks, which entrepreneurs don't like them at the beginning, especially when they are defining themselves as startups and not as a grown-up company, because it slows them down. They need to rise, they need to grow quickly, and that's how they work. However, they are in the insurance industry and they are in the security industries, and we'll talk about securitization of or collateralization of credit and trusted, etc. But the more important part is the KYC element of it. So On the banking side, on the finance side, today we know that KYC is not enough. Know your customer is not enough. You need to know it's a KYB. You need to know who's the beneficiary, the end beneficiary of the money of that specific deal. So it's not just, oh, it's some sort of a shell company, another. You need to go all the way to understand who's the beneficiary. And here there were two statements that were a little bit puzzling to me, and that's what we read in Insurance Insider or one of the newspapers. And one came from Corinthian Group that said, well, we checked the domain name was good enough, the mailing, the voicemail, which the voicemail was very, very puzzling. And then there was another statement that came from Vesttoo that said, oh, we actually physically visited the bank, right? Completely different things. Now, as an investment banker, you need to do the due diligence. If there is a deal, there is physical, you need to be there. You need physically to be there to see, oh, they want to sell you a factory. Here's the factory. It exists, right? So this is the puzzling elements. Like, we check the email domain. That's your due diligence.
It's certainly a mixed signal with what you were mentioning earlier. I mean, they are basically saying we followed our standard procedures for know your client. There was no missing element there. And if they did so, why did they have to just quickly fire so many people from the company? Why did they put the top management on leave if there was no fault inside of Vesttoo of procedure, right? And it is puzzling that they are mentioning this, because one would assume that their way of defending their procedure would be, yeah, we have system confirmation that the LOC was lodged and registered by the bank and by our back office. That would be the end proof, right? But they're not going that way, and that is puzzling.
Yeah, I mean, as soon as the news broke, the fact that the senior executive team left within a 4-day period, that was very troubling, because they did a little research. These are insurance executives that have been in the industry for a long time. Average tenure was 25 years. And to disappear like that is scary. And I think that was the first nail that was put into this coffin.
Yeah.
I just wonder if it's it's such a crisis, and they had two failures, right? One is controlling the optics, which for something like that happens, first call is too legal to understand what's going on, and at the same time you have the board of directors, their first call is to their own legal and trying to figure out, okay, how do we manage this crisis? So what do? You remove the CEO, CFO, because you need to show that you're doing something, and the responsibility of the board, of course, is for the shareholders or the investors in this case, because it's private. Yeah, I just wonder, because they are still doing audits and things are in progress. So I don't know what else they could have done.
Well, I mean, obviously, crisis response on the marketing side is super important. You need to protect your reputation and your brand, and by not responding agile in an aggressive fashion to countermand what's going on, and have a little more transparency and open it up to the marketplace, so you don't lose trust and faith, which is what you've built in your brand, especially in something like this. To wait 3-4 weeks now, it's been since this first came out, and the board's finally making a response or releasing a response to it. It's a little too late. Add multiple nails to this sucker.
Yeah, I think you touched a very important point. Regulation is important, but this is a marketplace of trust. The carriers need to trust the system and the platform. The investors need to do it, and I think what is being tested right now is whether the insurance and securities market, at least in that sub-segment, has lost trust or not. I think Ledger CEO Samir Shah came out and said, look, it really depends on the type of security and how you structure these things, and there's no really concern about the market as a whole. This is just a particular case. And I agree with that view. But still, we still have to learn what happened and be forensic about it so that everybody can recover trust and continue doing it, even for Vesttoo and their shareholders.
So before we jump to Samir Shai and Ledger, because that can be a very interesting topic to talk about and their approach of how they're doing their secondary market for ILSs, non-cat ILSs. I just wonder if one day we'll have the opportunity to see or to read about the control measures that Vesttoo had internally, their internal control processes that are required, right, from their, what is the process for the KYC, the panel, how do they verify everything? What would you recommend for a company like Vesttoo or future marketplaces? What type of control measures and processes they should have so this kind of catastrophe will not happen again?
I think the insurance industry has developed for a very long time this very basic notion of first, second, and third line of defenses. Like the front office has a fiduciary duty to do things right, even if they have the incentives of getting the deal done. There's a secondary layer of defense that it's a back office that does not report to the same person that is commercially driving the operations, and that is very healthy. There's an element of a system and process. There's also an element of reporting and organizational and how the way these things are organized. And then the third line is definitely audit. You have to have a post-mortem revision of the deals regularly, and even in this type of platforms that are so dynamic in terms of issuing, the auditing process needs to be much more frequent, in my view. So it's a very basic notion. There are many other paradigms of how to control these things, but just keeping things separate, having 1, 2, 3 pairs of eyes revising the deals is just key.
Yeah, I mean, if you look at how standard captive business, and there's a correlation to this with having a fronting carrier, then you have reinsurance partners, and then if someone's taking risk, you could do a captive business or a segregated sale, et cetera. And then that segregated sale, based on what percentage of risk it's going to take, there's regulators that are involved within the domicile that they're located at. And the regulators will be involved in looking at the reserve requirements that are going to be needed for the quota share layer that they're going to take. You bring in your banking relationships and you have the LOCs, and then you back the LOCs with cash, so you don't use your cash on it. And then from that, you have statements, you have reinsurance, a banking panel. There's regulatory involved in it. There's more checks and balances. I think the issue with this is that the ILS market was so open and there's a lot of moving pieces very quickly, and there's a lot of capacity that's being put out. I think a little layer was missed, and that little layer is that little sidecar vehicle layer that has been structurally sound throughout the history of insurance, or throughout the history of sidecars and captives, by the way. This is finance 101. This is not anything special. This is not, someone didn't drop the ball. This was just a gross failure of competency.
Yeah, and going back to the position of entrepreneurs in startups, this is probably one corner that you don't want to cut. I mean, this is one of the things that it pays off to do properly from the beginning. Just make sure that your structure is sound, that what you say is happening, and that you make every party and stakeholder involved in the transaction aware of that and communicate it and being transparent about it.
Yeah, I just wonder, well, there were two things. One of them that got me giggling in the inside that Emilio mentioned, which is the ALS market is moving fast, which is it's a little bit funny, you must admit. But, well, it is. And we can talk about, the competitor Ledger and their creation of second market. And one of the things that Samir Shai once said in a past article, I think it was, when it comes to cat bonds, pension funds will hold it until they will want to sell it, in 20, 30 years. when we're talking about speed and startups and cutting corner, what we've seen here is the board of directors stepping in to trying somehow to control the fire. What can they do as a proxy of the investors? And you need also, as they grow, they will have independent, and part of the board will be independent, that will be part of their auditing committee, but that's more financial. What can they do to prevent things like that happening? Or they are just like, there will be other repercussions against the board because they broke their fiduciary responsibility.
You want
Go for it.
Yeah, no, that's for Dario.
I'll be the velvet sledgehammer here if you want, and just tear him apart. But you're going to be much kinder than I would, Dario. So it's all you.
I mean, I am empathetic with the board members, and I'm, I don't know the exact board composition of Vesttoo, but I am assuming that the round lead investors and the past round investors are the main responsibles and the main voting. They are really taking the bulk of the problem right now, and I'm empathetic with them. And I guess your question is really going back to the moment where they decided to invest in this company that had such an appeal.
I tell you what, my question was to try to serve up to Emilio to talk about the Indemnity Lab and to show how an investor, a PE or a VC, can be proactive through his board seat and making sure that his unicorn, Vesttoo, which turned into a unicorn, will not, fuck up because they are burned. They may be completely innocent, and they can be, and maybe allegedly, the CEO or the CFO are completely corrupt. We have no idea at this time, but the board, they need somehow to be proactive about it. Sorry for the interruption. Dario, please continue.
I'll let Emilio get into it. What I was going to say is that definitely, even if you're, as an investor, really excited about the technology and everything makes sense, you have to wonder what can bring this company down. What sort of thing can bring? And for me, in Vesttoo, it was rather obvious that the solvency of this whole scheme and the credibility of the scheme is at the core of it. So any investor would have to review and do the due diligence of the system, the back office, the controls before even entering into the investment of the company. That's just my view.
I mean, this unicorn without a horn has turned into a donkey, and they've raised over 108 million. What could the board have done? Obviously, hire Indemnity Lab. I mean, what we do is we run strategy. We look at the verticals within the organization, whether it's underwriting, claims, operations, reinsurance, alternative risk transfers, etc. And we dive deep, look at the current strategy, and then recommend changes within their strategy so they can be more successful. We don't do due diligence yet, and I think this is part of the due diligence section that they would have to look at. But this would be, we would look at how they run their controls, and this would stand out. If there's no panel, that's red flag number one. Highly recommend a strategic change to make sure that there's financial panels. Is that just finance 101?
I feel that if the underwriting technology, the AI underwriting that Vesttoo have developed, and it's at the core of their operation, if that is untouched, if that is really pristine and it's effective, I think the company still has some a potential to come back and do the right changes and slowly regain the trust. The trust is that they lost. It's going to take time to recover, but if their technology it is sound, and if they are adding value to the insurance and reinsurance value chain, I think they have a legitimate claim to come back.
Oh, absolutely!
So I'm crossing my fingers. Oh, go ahead.
I think they'll have to rebrand, and they'll have to regain the trust of the ILS and reinsurance community, and that can be done by adding additional checks and balances to it, the rapid growth will have to be tempered. You're not going to be able to write $4 billion in reinsurance contracts in the next 4 years or 3 years. I mean, maybe close to $1 billion in the next 3-4 years. Have the tempered growth. Show the proper checks and balances. Have more transparency. Have a quicker response with marketing when any little thing happens. Every contract that you have, be open about it. Just rebuild that trust. And insurance, we're not selling anything tangible. Everything we have is non-tangible, and it's building that trust layer between the consumer and our risk-sharing partners.
Which goes back a little bit to what can board members do or can investors do, and is be patient and focus on the real value of the platform. Take the pill now, do the harsh measures now, and do not expect to recover your returns soon, but just be patient and invest into the future. I think that's the only advice we can have, because if they just leave the company on its own mercy, everybody loses.
Correct.
So I love the thing that you said earlier in terms of being naive or not. I call it a little bit of romantic or optimistic in terms of that there is an opportunity. I hope that, with all the auditing and investigation from the FBI, and I don't know who they hired, if it's EY, PwC, etc., whoever is digging through the books and all their emails and everything, hope that they will come up clean and they will figure out that there was, or they will get a slap on the hand of not having enough catches in the space, in the process. Sorry. I really want to see that there will be a success, and moving from that, or they will clean, but then they will need to start rebuild. So if we talked about what the board could have done earlier to prevent, now we were talking about what the board can do to set the path forward with the new or the old reinstated leadership. It's a question, how do they build trust again? And that will be a process, right? So the failure point was the LOCs. What can they do? And we sort of hinted about it earlier, instead of LOCs, to keep this marketplace running. Emilio, maybe that's something for you.
Yeah, that's probably it.
What could they do? They could show the collateral that's backing the LOCs. They could show statements. They can have the panels. For them, this is not rocket science. I mean, this is just finance 101, and it's just making sure that you have the right, if you don't have the right internal team, bring in the teams that will provide that guidance, bring in a consultant, bring in Indemnity Lab to help you and guide you through this. There's ways to show your partners, whether they're reinsurance partners or carrier partners, that there's third party looking at this now. Before, you didn't have any third party looking at this. Now you have a third party looking at it and providing that guidance to ease engagement with them and provide more transparent security. I think they need to start having more transparency immediately with the press, with their partnerships, etc., just so they can start building up the trust again. If they maintain the secrecy that they've had internally, it's just gonna, there's a lot of hearsay going on, and everything we know is hearsay. We haven't seen any factual data. Once they start releasing that, which they should, just to mitigate any further crisis management, it'll ease concern. I mean, the last thing you want is the Wall Street Journal to be writing articles about you, or Forbes, and they are.
Well, 60 under 60
on a negative
50
light.
under 50. Okay,
Yeah.
that's something else, right? No, yeah. I just wonder if on the next episode we need to bring Micha Cooper or another blockchain specialist to talk about transparency and providing and using blockchain as that infrastructure to build trust, because then everyone can see. The reason I bring that up, because I don't remember in which newspaper there was a point that someone was talking about that they are always looking to get a screenshot of the bank account of the trust to see that they have the money. And the thing that raised my eyebrow was a screenshot of the trust bank account. Screenshot. And I was sure you can fake it. is there a better way, a more trustworthy way to get an insight that the trust actually has that money that needs to be the collateral for that risk, and instead of a letter of credit, actually there is money in a bank account, or in this case a trust. Now, is that something happen? How is your Web3 knowledge and experience, and how can we merge it to
very,
regulatory?
very small, but I completely agree with you. I mean, the in DeFi and other sort of technology-based systems, this is the norm now. This is everybody's is just structuring and encrypting and doing a completely transparent footprints of how things are being ledgered and registered. That is not something new. And I think that is available. That is easy to implement. I don't think we need to go back to the old days where I remember we used to, I don't know, close transactions on the phone and then have the back office do a recording of the confirmation and then have a fax. You know, that's old fashioned, but it is even that old world is even better than screenshots, I guess.
Well,
I don't think screenshots work.
The screenshot, that was the thing. It's like between that and the voicemail, and we made sure the domain name of the email is correct.
Yeah,
that was the
Well,
better.
Now with generative AI, you can create a persona and you can say this person's from whatever bank, and you can have a video conference with them, and it could be a completely generated individual. So you need to be very careful of how you're doing things nowadays.
Well, I'm trying to be optimistic regarding what's going on in Vesttoo. I think that we're going to see more and more information coming out from that, the impact on the Corinthian Group and other members of this industry, and see what type of other opportunities from different companies and startups it's going to bring, because the ILS, it's a very important market. This is how you close the loop and bring it back to the people who actually pay the premium.
Yeah, I think it'll be interesting to see what happens with capacity and what fronting carriers are going to be using for capacity, and what they're going to be requiring their distribution partners, their MGAs and InsurTechs out there, in lieu of having, a Vesttoo type of replacement. I think it's going to be more. They're going to be more careful with their capacity and their credit risk that they're taking. So they're going to start requiring probably higher cash-based reserving from their partnerships based on quota shares or XOL layers, etc.
Dario, any last words on this topic? Not.
Well, we didn't talk much about the role of the rating agencies, but I think
Okay, let's
these
talk about
guys
that
always
if you
come
like.
into come into the heat of the situation, because they are supposed to be there also, qualifying the security and the what can go wrong with the structures. I think there's a learning here for them as well. Fortunately, I don't think this is going to be a sector-wide phenomenon. It's just very contained. But yeah, I think rating agencies should also be listening and reviewing their processes.
And I think that AM Best jumped 2 legs in immediately as it started. But again, it's like we'll see how things progress.
Yeah.
Gentlemen, it was a pleasure chatting with you again on this topic, and we're going to continue this conversation as news rolling out. As news
Thank you.
roll
As
out.
always, it's a pleasure. Dario, as always too.
As always, thank you.
Cheers, guys.